Okay, guys, welcome to the trading room. Glad to be with you. My name is Sol. I'm here with Mickey. He will introduce himself in a minute. Welcome to the trading room. Just please, a quick request on your chat settings. Please change so everyone can see what you type, not only panelists and hosts, but everyone. That will be more interesting to everyone, more friendly. Remember, we're going to be analyzing markets in live market conditions. We might take a trade here and there. Anything we say here is not meant to be a buy or sell signal. You need to be responsible for your own trading, and we do this for educational purposes only. Remember, on Mondays, we tend to do a weekly forecast. We try to discuss some topics and look at the large timeframes to find opportunities for the upcoming week. Tomorrow and Wednesday and the upcoming the next of the week we will have more raw trading. Guys, I wanna just jump ahead. Let me share my screen, and the topic for today, of course, will be gaps. Okay, today is everything about gaps. Let me show you my screen here, and as usual, we're going to start to discuss the dollar index. And we are going to go through some stocks and indexes and the Forex calendar. So I think I'll go through the calendar, and then we'll jump to the charts. To let me open up the chat here, just to be aware if we have any schedule announcement that might have a high impact in the markets, and then we'll come back to the charts and see what we need to look for, and we'll discuss the gaps topic. So today on Monday, nothing very important. Of course, we have all the situation in Eastern Europe. That's an ongoing topic, and it brings a lot of volatility into the markets. You might have, we might see maybe a lot of unpredictable movements and widening spreads, and so just be careful with that. But nothing's scheduled that might impact the news as a scheduled announcement. Tomorrow we have a cash rate in Australia. We don't expect a change in interest rate, so this should be already priced in the charts, unless we have a surprise. If there's a change in the interest rate, we might see an important movement. If not, otherwise we tend to see a lot of volatility, choppy movement, and then back to normal prices. So not much of that. We have GDP in Canada, US dollar. Those are important for volatility, but those do not tend to change trend direction. So just be aware if you have open trades during those announcements. Wednesday we have interest rates in Canada. Okay, and in this time we do expect an increase in interest rates. So those are very sensible moments. If there's a surprise here, so we will see an important reaction to that and potential change in direction. Otherwise, we should see that already priced in the charts. We'll see how that looks. And as long as we don't have a surprise, we should continue the current trend. If we look at the history, we see that most of the times the forecast and the actual release it matches. So we didn't tend to have a lot of surprises. We had one, two. Okay, we do have some, but most of the time, the actual and the forecast and the actual, they match. So we should see an increase in the interest rate in Canada, but be aware of those announcements. And of course, on Friday we'll have the NFP, non-farm payroll, which always brings a lot of volatility into the markets in all the major pairs. So just be aware of that. Now going back into the market, we have a very complex history to tell, and we have been following this very, very closely. We had and probably, guys, some of you saw last week's trading room on Thursday, and we discussed this a little bit. But as Russia entered into and started the conflict started, and they went into Ukraine, we saw a lot of money flying into assets, safe assets such as the gold and the dollar. So we had a lot of money going into the US. and we will see the repercussions on the stock market. We saw a sell-off on the stock market, a lot of money going out of the stocks into the US dollar, into cash. So we had that strengthening. On Friday, a little bit of recovery, and we'll jump into the gaps for a second. Let me see if we can find the gap right there. So almost every chart we're going to open, we will find this gap. So Mickey, now just in 1 or 2 words, introduce yourself and tell us what's your specialty and what are gaps, what causes gaps to be formed, how should we approach those gaps, what can we do, what can we learn about those?
Okay, great. Thanks, Joe. So how are you doing, guys? I'm Mickey or Michael. I've been trading for the last 15 years, mostly day trading stocks, some commodities, indices, and a little bit of options. But main focus is definitely day trading stocks. So thanks, Ruben. Great to be here. By the way, before we will start, can you type in through the chat if you guys are trading stocks or ever traded day traded stocks in the US or in Europe, wherever you are? It will be interesting to see it. Okay, cool. Okay, Alex, great. So we'll try to bring just a little bit more market observation to you guys, so you will have like the bigger picture when you are trading, even if it's Forex. When you're trading Forex, if you'll have the bigger picture, then maybe it will help just a little bit. So Shao, let's talk about the gaps that we've seen here. So usually you don't see any gaps like this on Forex, right?
Yeah, Forex is less usual than in other markets. We know it's an ongoing market that doesn't close, or brokers, they stay open, and we have 24 hours of feed. So we don't tend to see gaps, but they are more usual in stocks and other markets. But now, in this case, we can open up just any chart and we will see a gap after the weekend. But the principles of the gaps, of course, they're similar to other markets. So
yeah. So it's usually comes from obviously news, and basically when the time comes when let's take a stock or any pair basically. So let's say there's a buyer and seller here, but a day after, the buyer and the seller looking to buy or sell below the price. So basically the bid and the ask changing overnight. And that way, this is the reason you're getting this gap, technically wise. But if we're looking at the reason behind it, or the fundamental, is usually because of bad news or good news, depends on the gap. It's very common to see it when we're looking at stocks, because there's a lot of news coming every day. So for example, earnings season, you will see Apple, or you just saw, if you looked at the news, you probably saw Facebook dropping 25% down, or Netflix, Google, Amazon, PayPal. All of those stocks dropped or gapped up because of the news. That was the fundamental that drive the price to a different bid and ask, basically. That was the main thing.
Yeah. So in this case, it's not like surprising news, but it was all the situation in Europe during the weekend.
Yeah.
So exactly. So if we, I don't know, you wanna give a little, maybe some of your insight to what happened on the stock markets and how that related into the US currency probably, and we can go ahead and also explore oil and see what happened to oil. And okay, so let's start with the stocks. Mickey, tell us about the.
So maybe we'll go to the 1H, just so you can see when I'm looking for gaps, I usually look for it on a 1H. It's just easier to look to see that. So as you can see, most of the time we're looking at the US market, the 500 the S&P basically. So as you can see, there aren't a lot of gaps along the way. But when it comes to big news such as invasion and stuff like that, then you should definitely expect for to see gaps either up or down. Major gaps, it's almost, what is it? It's like 1.3 at the moment, but it was at the beginning of the day, it was like 2.5% down. And as you can, you will probably see it later on if we will close the gap, that most gaps will act either as support or resistance when the time be. So when we will close the gap, and that means that we will have a trade at the close of this candle. So when we'll have that trade, it will basically should act as resistance, and from that point we might see a drop. So when trading gaps, you always look for the close of the gap or the enter through the gap. So let's see if I can draw something. So for example, if the next days will be just like that, dropping down, moving higher, you should expect first resistance at that level. So when you enter in the gap, and the second resistance will be when we will close the gap. Now, it doesn't mean that you will see it like today or 2 days from here. It can easily take a month or even years. But at the end of the day, when you're reaching the close of the gap, you should expect a bounce from it.
Yeah. Correct. The way I interpret or I understand gaps, it's an extreme imbalance between buyers and sellers, correct? So there's a lot of sellers up there, and there was not enough, there was no buyers to buy at these prices, and the buyers came available at the bottom parts. So in terms of supply and demand, this creates a new supply area. So people, they won't be willing to buy during this area, but they will wait for prices to come back into this area. And once the prices gets to the supply area, on the fresh supply area, then people will want to sell that supply area because that's an attractive price to sell and not down here, correct?
Yeah, and remember, psychological wise, if those guys that open today with a gap down, right? Let's say you took long here, right at the end of the on Friday, and you opened the beginning of the day started here. So basically, if you're long here and you see this huge gap down, you're probably holding yourself from jumping out of the window or something like that, because you are dropping 2.5% down. So most people, when they took that long, they also bought here again to basically drop in the price or the average price, right? And the other guys that took short here, they want to cover, so they also covering at the beginning of the day. And this is what should move, like we see right now, should move the price higher. But as news getting worse, if they will get worse, then we should see a drop again.
Drop down.
Yeah.
So what you're saying is buyers here, they open up down here and then buy again. And sellers, they buy down to cover the profit.
This is why
profits, to bank profits, okay, to cover the profit. So there are a lot of buyers down here that push the market.
Exactly. Yeah.
Very interesting. Okay, so let's go back to the dollar index. Just remember, the dollar index is the behavior of the dollar, US dollar, against a basket of currencies. Chart patterns and normal behavior of the markets won't be as relevant as normal, since we have a lot of panic movements and fear movements and emotional movements in the market. So if suddenly you have a very clear, I don't know, candlestick pattern or zone that should hold or should react as some way, it might not work out during these times because there's a lot of emotion being involved, okay? But if we try to understand what's been going on with the US market lately, we see the strengthening of it. We saw, going out of the stocks into the US dollar. So there's a lot of demand of US dollar, which is making it stronger. But what's interesting is the it's how the commodities are going up and the inflation is going up in the US. So if we open up a commodities price index, we can see how the services and products in the US are also going up in the US. So we have a strengthening of the US, a relative strengthening of the US against other currencies and other products, but we have an inherent weakening of the value of the US. Okay, so the inflation is there. So macro, we have reasons for going long the US because there's a lot of money flying into the US dollar. But long term, we will see the effects of the inflation in the US economy, and we might start seeing a lot of sell pressure in the US. Okay, for commodities, it's the Thomson Reuters index. So it just measures a basket of commodities and the average price of the commodities. So we can see kind of the cost of living and inflation in the US. So we could argue, and we could we could go long in the long term, long or short the US. In the meantime, we will have a lot of volatility as the situation in Eastern Europe evolves. I would like to go quickly to the oil markets, and we can see, of course, prices. Maybe you want to.
Yeah. So prices are moving higher. We touched the $100. That's a psychological effect there. So it was actually, I missed that trade, but it was a simple trade to take. There's also a nice channel that the oil, played with those couple of several years back. And basically now, as you can see, the price is moving higher again since all the situation in Russia and Ukraine. And if you trade in stocks, this is a great place to look for stocks that will also get up, obviously. And as oil will continue higher, those stocks will continue as well. So if you're looking to trade anything with gold, with oil, definitely check out some symbols. If you want, I can type in the chat some of the symbols to look for. Regarding the gaps, it's usually there's a common knowledge or common sentence that most people use, and then saying that gaps should be closed, but at the end it doesn't mean that they will be closed at the same day or a day after or a week after, right? 80% of the gaps you will see them at the end and they will get closed, but it doesn't mean that it will be today or tomorrow. So so make sure you don't fall into that trap. Most of the time when I'm looking to trade gaps to the upside, for example, if we're looking for this gap up, I will look for a retracement of about 70 or 80% of the gap, and from that point look to the upside and try to buy it if I see any potential move to the upside. No.
Okay, and if we connect, is that WTI? Yeah, this is the futures, but WTI is quite similar. It's the same chart, Duncan. Okay, you see it's the same chart, so it's the same behavior. And there are some currency connected to the oil prices, so we can discuss the Canadian. We'll go to the chart and we'll see how is that impacting the Canadian dollar. And remember this chart, okay? And you will see how it's very, very similar. Okay, we can see how it's very, very similar to what's happening in USD. Okay, in the USD, we have kind of the same patterns being formed. Okay, with the Canadian. Please discuss. Okay, so let's jump into the. We have also gold. You want to give your insight in gold? I can.
Okay, I mean, gold is looking pretty good, right? And amazing move, broke through this resistance level, and you know, like you mentioned, it's a safe place to go to. So in desperate times, just look for gold.
Yeah, that's clear. And that was a Thursday movement. We did have a huge retracement on the same day, which was kind of unexpected. I thought this just to break and continue. It did retrace, but still the bias, the momentum is to the upside. And as the war continues and the conflict continues, we'll see a lot of money flying into gold. You know, technical traders see this as a bearish signal, kind of a fake out or a pin bar or something. So that technically that will give you mixed signals, because we have the fundamental supporting buying gold, but a lot of, you know, this is a technical selling signal. So just be careful how you approach this, and make sure you position yourself correctly, and you know where your exits are placed. Okay, so let's jump into the platform, and we'll discuss the major pairs, and if we need we'll go back to the trading view and we'll do some extra analysis. Just let me show you some things here. Okay, now you should be seeing my MT5, and we'll start out with we'll do the majors, and then we'll continue. So MT5. Okay. Okay, so this is the Euro USD. We have a lot going on in Euro USD, of course. If we go a little back in time, we had this V shape, which is a very bullish signal. This is a bottoming pattern in the you know, as technical reading. We have a lot of demand causing a very important movement to the upside. We have the retracement to mid demand and a failure to continue higher. So unexpected movement was, you know, as we tested this demand, mid demand. If we go to the hourly chart, it's very clear to see that. Okay, it's this demand right there. Okay, so the expected movement was to continue higher. Now that failed. The tension in Europe started to raise and to increase, and as the war began last week, we saw this huge sell-off. Of course, we have a lot of euro being sold, money taken out of the euro and into the US dollar, okay, which makes sense as the conflict happened in euro. So we have this sell-off, and then the recovery. And now I want to show you how this is just amazing in terms of supply and demand, okay? Because if we're on real time, okay, this is the sell-off, and this is the recovery. Now in the recovery, we have on real time, we have a new demand. Those of you who have been following, you know, we are kind of, our approach is supply and demand area. So we have extreme demand here, we have demand here, mid-range demand, and we have what could be a resistance level, but also a supply area right there. So the recovery ends pretty much or very close to the supply area right here, and then the gap opens at the demand. Okay, you can see this. Okay, how it didn't gap lower than the demand, it gapped exactly to the demand area, because there was a lot of buyers ready to buy at those prices. So the buyers came in, and now we're starting to close the gap. Still open. We have some pips here, but remember, this gap might act now as a supply area, fresh supply. So in terms of where are we heading, it's very unclear to say. The gap up itself, okay, this is still, okay, this is a new demand area, because there was a lot of buyers coming into the market to push the market up. So we have fresh demand and we have fresh supply. And in the long-term perspective, we have been just moving sideways. Okay, this new push down kind of turns the bias now to the downside. Okay, if the expected movement down here was a push higher, that failed, we retrace all the way down to the lows. The expected movement would be to the downside, money, euro out, dollar in. So that would be the next expected movement. Again, this might fail, since we have a lot of emotions and fear trading, and as the war and the conflict evolves, so we'll see more. We will have more information to make better decisions. But my very next trade needs to be either a sell of this supply, okay, would be the gap filling, or waiting for the price to go to the demand area and a little scalp up. Okay, those would be the very next trades. Of course, we need to keep an eye open and see how this evolves and behaves, and we'll make better decisions and wiser decisions. Feel free to jump whenever you feel like.
I agree with everything you said.
Okay. Quite similar on the pound dollar. Money flew out of the pound into the US. These have gone into the lower time frames, but I'm pretty sure this will create a new supply area. We'll check that in a minute. I believe you guys from last week, you marked this as a demand area.
Yeah.
Okay, so Ruben. Yeah, with Ruben. So we gapped down. Okay, we had this movement down, ended at the demand area. Let's see how that looks with some detail. This movement up, similar to the euro, we have a new demand being formed. We already reacted. That was gap down. We are
at the close of the gap.
The close of the gap happening right now. And we can see how we're holding there. Now we need to wait and see if this pushes down, or if we will see a break up. But you can see the reaction once and now twice, okay, acting as a resistance. In this case, Mickey, what would be your approach? This is just a chart, not a stock. Whatever you want, you see the gap being filled. What will be your next movement down right here?
I would usually trade this close of the gap. So basically took this short, probably look for a down move, maybe for this area of support. So
yes, but your very next trade would be a short.
Yeah,
this area. If we think probabilities and statistics,
yeah,
most of the times we will see a reaction to the gap and we'll see a movement down.
Definitely.
Even if that moves down or moves sideways and eventually continues higher. But the very next movement should be a push.
It depends on how big is the gap, and like you mentioned, how many orders of sales orders you actually have in this close of the gap. And again, like you said, we are at the time when momentum is actually creating the moves, right? It's not about technical, but it's more about momentum, the fear, the psychology behind it. More fear will get people to react more aggressively, simply as that. So sometimes you will see an amazing level, but since there's a lot of fear going on, you will see it will break through it simply. And in other times it will hold, and you will see a resistance or a support.
Correct. Okay, and if we keep just in terms of supply and demand, we do see, okay, it matches this. It was in real time, okay? Think of this movement that was a demand, which was broken. So this now, okay, this area here, becomes a swap area, and as in this case, mid-range supply. So a break higher of these levels would take us all the way to that supply area, and of course, extreme supply, which would be all the way up there. You can go to lower time frames to to better detail. But those are the next levels. So my next play would be I tend to wait for extreme levels. So my movement will be waiting for a level to to this demand and then buy, or waiting for a movement to the supply areas and then shorting the market. So that would be my analysis. Fundamentally and long term, very hard to tell where's this heading. I can tell you for sure. I mean, there's not a lot of trend. Okay, we have been moving just sideways. Momentum is down. Okay, just from last push down, we have a lot of momentum down. But who knows? Okay,
yeah, definitely.
It's very, very hard to pick a direction.
Some people know, but the result politics and stuff like that.
Yeah, they're close to the right people.
Yeah.
So Kiwi dollar, it has a story behind. They just in New Zealand, they recently raised interest rates. So since the announcement of the increase of interest rate, we saw a strengthening of the Kiwi against the dollar. And the day of the announcement, we were around these levels, okay, at this resistance level. And then I believe this is the day of, I'm not sure, it's 1 week ago. We have the increase in interest rates. We saw all the movement all the way to the tops, and we have marked here from last week, this one right there. If we go to lower time frames, we'll see that's the extreme supply. So buyers took the price all the way to the supply, and we reacted from there. And then the continuation lower from the conflict, starting. As a large picture, this is a compressing channel. So demand has been consumed all the way. So we had demand here already consumed by this day. We have new demand here. So statistically speaking, compressing channels tend to break to the other side, to the contrarian side. So if this is an ascending compressing channel, we tend to see the next movement to the downside, which would be a sell movement all the way to this. I believe we'll find some demand, here. I'll check that out. And we already consumed this supply, but we still have the extreme demand supply. So we might see this compression continuing all the way to the supply, and then the movement down. Let me just make sure this is a supply area. I'm pretty sure it is. You can see it there. You can see the supply. Again, the gaps, we're filling the gap. Would you say this is a short worth taking?
It's kind of hard to tell at the moment. It does react to it, right? Leaving this tail. But the momentum is a bit strong.
Yeah, strong. Yeah. That's 30 points, 13 points. So that may be a good risk reward if we take it short and we see the reaction. Our first target, our potential target will be all the way down here. So that's a good risk reward trade. What would be the confirmation you look before you enter the trade, or would you just jump into the market and sell here? Or what would you look in the charts to before deciding I'll jump ahead?
Yeah, that's a great question. We are working like in any market, any strategy, we need several of parameters in order to confirm the trade, right? So the first one could be the close of the gap. The second one will be that the market, let's say if I'm trading stocks, so the US market, the S&P or the NASDAQ is also showing weakness. So this could be a second parameter, maybe a form of a candle or consolidation, a small consolidation, and the break of it.
Okay.
Those, and maybe volume increasing in this area.
Yeah, volume tends to be a little tricky in Forex.
Right.
So it's not something I rely on, but all the rest, that's a great idea. Like looking at the US stocks weakening, and that would be money going into the US. So that would be a strengthening of the US, in this case, a weakening of the Kiwi. What I tend to do is to go, if I see the level I want to short, let's say this is the level, okay? and I want to short, then I wait and I go to lower time frame. So then I can go to either the 15-minute charts or 5-minute chart, and I start and I look for a pattern to tell me to go short. So that one might be a head and shoulders or a Quasimodo. In this case, would be a break of this low. Okay, so I try to find where is this up movement ending,
right,
or finishing. So of course you can just take the short and you have a better risk reward ratio on your trade, right, because you have, but you give on confirmation. So in movement, like if I want to increase my confirmation, then I go to lower time frames. Let's say the 5-minute chart. I look for a key level to break. So I don't see any other key point other than that. So I would wait for a break, okay, of this point, or at least to touch it, and then the retracement to what needs to be in real time a fresh supply. Okay, I need to see a lot of move. This needs to be a sharpened movement to the downside. Okay, and then this movement up reacts to that supply, and then I go ahead and short the market there, and then I ride the market to the downside. That decreases your risk reward slightly, but increases your confirmation. So it's always that pendulum between confirmation and
right,
and risk reward. But with that amount of uncertainty, I tend to look for more confirmation just then.
Definitely. So when you're trading, you basically need to find the balance between more percentage, like a winner percentage, and the other point of the equation is the ratio, right? So if you're looking for, like you mentioned, a good confirmation, so you want to win more, let's say 70% success rate, but you decrease in the ratio, or the opposite.
Correct.
Yeah,
that's right. If you guys like, I don't know, candlestick patterns, so maybe this candle on the hourly chart closing with a tail up, that would be kind of a pin bar reversal bar, and you can write that down, of course.
Would you look also, if we're on this chart, would you look at this area as well? So like all of this.
Yeah, again, real time. Okay, that's a good question. So we need to see, we have all this area. Okay, that's an important area. Real time. Let's go back in time. We have this sharp movement with continued to the top. So that's a demand area. Okay, real time. We kind of didn't react to that, but we crossed it. So this becomes now a swap area. A demand area becomes a supply area, or resistance. Support becomes resistance, and that's where we reacted. We gapped down. So we still have a lot of interest around this area. So this a balancing and decision area, which is important to have a look. So yeah, past information gives us some clues to what can we do and expect from certain areas.
Right.
Okay, let's move on into the dollar. I think we can do the dollar yen and then USD CAD. Yen and US yen and franc are considered haven assets, okay, or safe assets. So here we have a conflict because a lot of money goes into yen and a lot of money goes into US dollars. So we kind of see a more balanced market, and that's why we don't see those huge movements we saw like in the euro or pound. We don't see them here. We did have this. That's a very powerful day. Okay, that's an important day of price action. We have a strong movement down and completely reversed and closing up. The whole movement, you can see it's kind of balanced. You can see the channel. We're pressing higher, 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 and higher. Okay, we're forming these higher lows. So every time the buyers are coming into the market at a higher level, so they're willing to buy US against the yen at a higher and higher level. So they're not waiting for the price to come down in order to buy. They're willing to buy at a higher level. So this is pressing, and at some point it just breaks hard through the roof, through the resistance level, or through what's
So
you know,
in this case, usually what I like to look at, if we're looking at you know, a trend line, and thanks. And you can see that the first bounce from this level, from the support level, the first bounce was pretty strong, right? The momentum was very strong. They pushed the price higher. The second time they came back, it was much weaker. They couldn't push the price to a new high, and the bounce was a little bit less sharper than the first one. And also in this at least area that they are trying to push it, at least for now, they couldn't push it through the previous resistance. So what I'm looking for is basically a drop in the waves, right? If you look at it as waves, you can start even from here. You have this first wave, very strong one, or here as well. And then the wave is beginning to be a little bit weaker. I don't know if at the end we will break down, but this is what my eye catches.
Yes, Carl, that's a good word, deceleration. Okay, we have more balance between buyers and sellers. At some point, some of them will withdraw, and we'll see an important break of this structure. Okay, either an important break to the downside or to the upside. Now, in trading books and stuff, you see, if you see this wedge and these triangles, just trade a retest. But it's important to understand what happens behind in terms of supply and demand and balance and imbalance between buyers and sellers, because we need to see a break up, and the break up to create an important demand area, a new demand area. Okay, it needs to be a relevant break up. So when the market goes down, it reacts to that demand. Same for the breakdown. It needs to create a supply area. Okay, so you need to really train your eyes to identify those key levels, key areas, so you know why things are happening, and then you understand why. If I was taught to sell or buy the retest, why it's sometimes happening and sometimes it's not happening. That's because there was a supply or demand being created or not being created. Okay, so that's important. So again, hard to tell which direction this will break. Of course, as buyers are coming into the market, Mickey said they're coming into the market, but they're doing it in a weaker way. So we really need to wait for like an insertion point where we'll see a break either to the upside or to the downside. It's hard to tell. So just be aware of that. And USD CAD, there's a lot of histories behind. We have the expectation for a interest rate increase. We should be seeing that already priced in the chart. So we should be seeing a downtrend here, which we clearly don't see. Okay, we don't see the down movement as we should be seeing it. We see prices, oil prices going up, so we should see the USD CAD going down. Okay, the CAD being stronger, and we are not seeing that. So that just tells the amount of money that is going out of the Canadian dollar into the US dollar for any reason, or out of these two markets, just to keep these things balanced. In last week, we had the attempt to break this range and immediately bought back to this little range here, which is just part of a larger range. So we have extreme supply up here, extreme demand up here. My view on this market is really to wait for a break of this channel right here, and then to buy either the demand area and the supply area. If you like to trade breakouts, so your targets are the demand and the supply. If you like to trade extreme areas, so you want to wait for the breakout to happen, and then to buy either the demand or sell the supply area.
And if I might add just a little bit, as you were saying, I believe at least my opinion, to trade this supply or demand area will be a much wiser move than taking the break, because taking the break, for my opinion at least, the percentage, the success rate of it will be much lower you can understand that if you will reach this demand area, there will be buyers waiting there. The odds are in your favor. But the break, I'm not sure of it, you know.
Yeah, and that's a great point. In real time, if you were trading the break, okay, this breakout ended up being a fake out, okay, a false breakout. So it reverses all the way down. So it's a very frustrating technique trying to catch the break. It very rarely happens, especially in the Forex market, which is a very balanced market. So we have a lot of breakouts end up failing. On the other hand, if you wait for the movement to happen and then you buy this demand, potentially you can place your stops below it, and your targets might be all the way here, okay, before this new resistance on real time, and you have a nice risk-reward ratio. But of course, there's a lot of aggressive traders that did catch the break and closed. Just a little scalp, which is of course fine. And we have a request for pound yen. Let's bring that up, and I think we'll wrap up afterwards. So let's just pull up the pound yen. Where is it?
Simon, regarding the trading view gap, just look for it on a 1H. You will see the gap easier.
So pound yen. Okay, some drawings from previous sessions. Okay, so we're speaking about this triangle being, we're waiting for this triangle. So which is a great example of how to approach these ones, because this break, this is what you want to do. This is what you want to see on charts like the dollar yen. Okay, once it happens, you want to see a break creating a fresh supply. So you need to zoom in and make sure there's fresh supply. So now we reacted to demand. Okay, you can see the demand movement down all the way to demand area. Okay, we reacted to that demand. We gap down to demand, and now we're moving towards, or we might potentially get towards the breaking area. So we want to go to the lower time frames and see if there's supply. We have mid-range. We have less clear, but somewhere around there. Okay, extreme demand supply. So you want to go ahead and wait for prices to go. Okay, that's the breaking area of the triangle. Okay, so that's what you want to see. Now, if prices goes to that area, that will be a great selling opportunities. In this case, we have the gap already filled. We have the reaction to it. Now, how deep is this going? Hard to tell. They might just reverse there and continue up, and continue all the way down to the.
This could have been a great scalp with a short stop loss, just taking the drop to this support there.
Yeah, let's see what happened on the. We had it on the. Okay, here it fails. Kiwi dollar fails to hold. So we have both examples: gaps holding and gaps failing.
Yeah. So by the way, when we're breaking through the gap like we see right now, if we retest the same area, we should expect it to hold, and from that point might reverse to the upside or continue to the upside.
Correct. Dunker trading view doesn't show gaps even in 1 hour time frame. What currency pair? What asset is not showing gaps? New Zealand USD. I will show you how it does. So depending on the broker you bring up here, okay, you can see 1 hour chart. So there you go. So maybe if you're watching some brokers, what they do, you can go, pepper stone. It's an important one. So you do have the gaps. Sometimes brokers they complete the data backwards. So if you go to Wanda or something, you will see like a candle here. But yeah, but even if you're watching Wanda, you need to be careful with that. That's very misleading. Okay, you're right. You don't see that, and you will see a candle here, even on the 5 seconds chart. Okay. Let's go back in time. Okay, there you have it. So believe me, there was no candle here, okay, in real time. This is just added data. Or even if you had, okay, this is what, a 60 pip move in matter of seconds. So even if you had stops over there or take profits, you would not have had the feed to fill those orders. Okay, so no stop loss would have help in this situation. Okay, that's important. Okay, guys, I think that was an interesting session. We covered the dollar index, the calendar, what we have, and we talk about gaps and the majors. So, guys, I think we'll wrap up here. Thank you for coming. Thank you for staying. It's just make sure a lot of abnormal movements we have during the week. So make sure you reduce risk. Sometimes it's better just to watch from the sidelines what happens, and not trying to to be active in times where your strategy statistics will not support you. Okay, yeah. So just be aware of that. Cool. So thank you, guys. Thank you, Mickey.
Thank
you, guys. See you next time. Bye bye.